Good evening once again. My name is Paul. Welcome to beginners class. So today we're talking about orders. We're talking about orders, buy limit orders, buy stop, and sell stop. So after I'm done with this, then I will move to we move to the intermediate training. So these are the orders we have in the market. Like I told you the last time, we told you about taking profit and the stop loss value, how to use them. Okay, these are very important things you must use. And as you go into the analysis intermediate classes and the advanced classes, you need to see um, how to and how not to use those stores. Now, these are orders in the market. We have different kind of orders, and the top of the list is um, which is the most common orders that is being used is the what's it called now? Is the market execution, market execution, market execution, and how is that? And how is that? Um, that means that this is the type of market orders. Orders means the way you order for stuff like order for rice and chicken, order for soft drinks, order for stuff. It's the same way you make order for your in the market too. But this time around is not. You there are some that you have to wait. There are some that gets you express delivery. Market execution, you can call it your express delivery. That means that remember when I talked about in forex that what we do is buy and sell. I'm sure we all remember our buy and sell orders. Our buy and sell orders. That in forex, what we do is what we buy low, and then we sell high. Okay. So when you are taking an order, the market, you take your order when you are making your most of the settings for your MetaTrader 4 is going to or 5 is going to be on market execution. That means that you can when you click on buy, the market is going to buy for you immediately at that spot. Market is going to buy for you immediately at that spot, and it's going to start running. Maybe you see an opportunity in the market. Now, this is the emotion, this is the manipulation, and this is where the manipulation in the market comes from, whereby market manipulates you on clicking on the wrong button because you saw the market is bullish, is buying, just pumping up, and you think, oh, this will keep pumping up, and then out of emotions you click on buy, and immediately you click on buy, then market started dropping again. That is the real manipulations in the market, manipulating your psychology, your what you're seeing in that market at the time. Okay. So um that is can you guys hear me? You can hear me, say hi, type I in the comment section. Please let me know if you can hear me loud and clear, very clearly. Great. I want to be sure you can hear me. Just type hi. All right, great. So let's move on. So market execution is the one that you do immediately. When you click on it, it immediately execute your trade for you. Now, let me quickly talk about spreads. Spreads in the market. Okay. What are spreads? Sometimes we call spreads. Spreads is the difference between, so when some of you have sent you links, you've opened your trade with your broker, right? Now spread is the difference between is a difference in price that your broker is willing to give you. Okay, so remember that we are buying, you are using a broker, what broker does is that it serves as an intermediary between the buyers, the traders in the market. They give us leverages to be able to use our $100 to be able to buy more points, use $100 to buy stocks worth $1,000. That is another thing that we should look into, leverage. So when you open your trader broker, you see somewhere where they say, what leverage do you want? 1 to 200, 1 to 2, 1 to 3, or depending on the broker, it could be 1 to 200, 1 to 1,000. What that means is that they are giving you an amount of that with your $1, you will be able to buy $200 worth of share. Well, I call it share. I mean, $200. You'll be able to trade, be able to leverage on $200. You're able to buy up to $200 units worth in the market, that buying or selling. You get what I'm saying? Okay, so that is what leverage is. So I will advise you not to go for very high leverage, because it might be a trap, as you are making profit. It could be fast for you to make profit, because you know what you are going to make normally with $1 might be in cents, even after how many pips. But when you use a high leverage, you can make more dollars, if up to $10 with $1 within a short time. It's really small, with small pips, but it's a trap also, because if it's going against you, your money is going to go away very, very fast. It's going to go for vanishing. Okay, guys. Now, so try and go for moderate. You don't have to go for the lowest. The leverage too are there for use. So try and go for moderate leverage, and then use them. Okay. And then what I use one to 500 or 1 to 1,000, sometimes depending. It's not always 1,000, depending on the broker. 1,000 means 1 to 100 actually. For some, depending on the broker. But so some actually means 1,000 though. Yeah. So, but just research it. Just don't use too much stuff for yourself. Yeah, and then your spread now is now. Excuse me. If you can hear me, please say hi again. Let me be sure that you can still hear me. Your spread is the difference between the spread is differences between the price that the market that your broker is willing to buy, to give to you to buy and sell. You understand? That means that when you are trading, you may not be able to buy, except you are using a raw spread, a zero spread account, where when you click on buy or sell, the market is going to execute immediately at the point for you. Okay, now let's take for instance now. This is the current market. This is the current part of the market. Okay. Now when you click on buy, normally if you're on a zero spread account, the market should start from here. So if you pick a sell, it should start from there. If from there and it started selling, it is going to start, is going to pick up immediately from the current price. Okay, now if you are not using a zero spread, maybe a standard spread account, let's say that the market is currently here at this current price. Okay, the market, and you click on sell, you click on sell from this point, the market is going to activate for you, but for you to go in profit, the market needs to come down sometimes below this point, because this is where the market is going to probably start selling for you instead of selling in. So that means that when the market, even when your markets are moving your way, you might not go into profit immediately. That is why most time when you open a trade, they don't start a profit immediately, because of the differences in the prices that the market is giving you. Okay, so the differences here is what we call spread. So when you want to trade on a MetaTrader 4, when you open your code, you go to your code, you can see the spread differences in the below the peers. Maybe one of these days I will show you. We'll do a phone analysis. You see it on the peer. You see the spread. You can see that the spread is gold is could be 100 BTC. Sometimes they go, I saw it as 500 spread, that's 50. So that means, maybe the difference, I don't know what that is actually. So I don't want to confuse you guys. Maybe the differences in the pips or points actually. So I don't want to confuse you guys. It doesn't really matter. So it has not stopped me, but I'm just trying to explain to you that that's what spreads are, okay? So the differences between the price the market is willing to offer you, your broker is willing to offer you a price, and then the price at which you have entered or you are entering the market. Okay, guys, just follow me, just flow with me. This is not the sweet part of trading. These are just beginning side. We are moving to the part whereby you all can make money, which is the most important part of it. Some of these things are even already leaving my head because they are too basic. I mean, it's been long. I taught it, even gone about it, okay? But they are important. You need to just understand them so that when you are seeing some reactions in your when you're seeing some things happening in your trades, and you are not becoming too bothered. You understand, okay, this is what has happened, okay, or this is what is happening. So when you click on, let's get back to market execution. When you click on buy or sell, the market buy for you immediately, okay? Market buys for you immediately, okay, right? And then, so now there's something we call buy limit, okay? So let's take, for example, now here, now flow with me now. Let's take, for example, let's say that you have seen a very good zone where the market could be and give you profit. You have seen it that, oh, this market is going to get here, and if you get here in the future, blah 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 blah. This market has been going well. Then there was a BFI footprint here, an origin of a footprint. Market comes like this, and then market is presently somewhere around here, present somewhere around here, and you have seen it, and you're like, oh, the way I'm looking at it, this market is going back to the origin of this zone. This market might go back to this origin to retest it, to to retest it for us to see, to know what is happening in that market here. And then, so what do we do? What do we do? We wait on it here. We wait for the market to get to the point. So whenever you have seen this, you have determined your stop loss area, which is going to be here. You have drawn your zone out, and your entry point is going to be here. Now there's some, maybe you have seen an institutional reference point, and maybe a candle, an order block, and engulfing pattern, and engulfing bearish candlestick here. Okay, so you're looking at this thing. When it gets into this zone, there's a probability for it to sell. Now there are two deeper zones. There are two zones in these zones. We have the first zone, and then we have the deeper zone. Okay, I'm going to get on that into the advanced course. Okay, so what makes you set a sell limit? Let's do a sell limit first. Is that this is where the current market is. This is the current market. This is presently where the market is at the moment. The market is currently here, but you have seen a zone here, and you are like, oh, it's possible the market, I mean, this may be a 15-minute time frame or 1 hour time frame, and you're like, oh, it's possible that the market gets to this point and starts selling. And you can sometimes, you might not be able to sit down with your chart all the time and all this, trying to see or trying to understand, trying to monitor your chart every time. Excuse me. Sorry about that. Sorry. Yeah, sorry. I had to take a break. Sorry, guys. So what you do while we set a sell limit. So what you do is that you go to your chart, you come to the value of this point where you have seen your zone. You look at the number. What's the number there? 0.8250. So you go to your phone, instead of you go to the place where you buy and sell. So instead of buying and selling at the point or immediately, what do? you click on sell limit. Yeah, the options are there. When you click on that market execution place, the options are there. You click on sell limit. So when you enter the price, so you can enter your stop loss value and then leave this TP alone or set your TP also. So what that means is that whenever this market moves, gets into the zone, touches this zone, this is your line, that point line, the market is going to activate and start selling for you. The sell, it doesn't mean that it's going to automatically sell. If the analysis is right that it's going to sell and it starts selling, fine. The moment it activates it, and it's going to start selling, and then it activates it and it starts selling, you will be in profit even if you are not there. And if it's going to hit your stop loss and then it breaks through your stop loss, then and you're not there, you have to hit your stop loss and you will rest and then we strategize again. Okay, so that is what sell limits are for. Likewise, buy limit also, the same thing for buy limit. Let's assume that you have seen a zone here also, see that okay, this market looks good, and as you can see here, the moment market got to this zone, it touched it. So let's assume that it was somewhere around let's assume that excuse me, it was somewhere around there. Now that it has touched this zone to sell, so you're hoping that this market is going to come down here because there is a zone here, there is a something here, another block, a rejection candlestick, a pin bar, whatever it is that is there. So then you say, okay, it has taken, and you've taken your profit, and then it was coming down again, and then you are not there. And then you are looking that it might get to this point and start buying. So what do? You set a buy limit. That what buy limit means is that when it gets to my zone, it's selling at the moment. But when it gets to my zone or to my place of buy limit that I set my buy limit, I'm hoping that it's going to start buying. So when you set your buy limit, you're certain that the market should start buying. So if it hits it and it start buying, you are going to be in profit. Okay, so when it gets here now, you're certain that start buying, and then you can start buying and go up again, and then you're going to be in profit. But if not, you might hit a stop loss or range here for a while, for a long time, range, like the Range Rover range, before you eventually start buying for you, depending on how strong that zone is, on how valid that zone is. Okay, now what about buy stop? Okay, what buy stop means is that this market is already buying here, but the way I'm looking at it, if it gets to this point, for me, I want it to keep continue buying. That means that this buy movement is a valid one. Where's my stop? Hey, sorry about that. I didn't know where it went before. So what this means is that it is a valid place. Okay, so the moment it buys up to this point, you just come here and set and look for the value here, just set it, and then you enter your value on your phone. We are going to do a phone test for all of this stuff. Don't worry, because we're going to do it. So that means that, and then it gets there and it keeps buying, you're going to be in profit. You could have put your stop loss here, and in case you retrace back there, let it stop me on the market and reduce my loss. Okay, so that is your buy stop. That means that this buy, don't stop it. The moment it activates it, let it keep going. Let it keep buying. That is your buy stop. Okay, and then for your sell stop, you're seeing the same thing here. That this market is coming down, and you feel like, oh, this market can sell more than this. The sale is going to be more. So you set your stuff here, set it here, blah blah, and then let it get there. The moment it gets there, it's going to start go to activate the sell, and then if it keeps selling for you, it will be in profit, and if it doesn't sell, it's going to be loss for you. Okay, it's going to be loss for you. So you have to actually pay attention to all of this. Okay, you have to pay attention to these stores. The continuation of the sell. These are buy stops, and then these are sell stops and buy limits and sell limits. So we talk about spreads, talk about leverage, we talk about so what else do I want to talk about before we move into our institutional reference point. What else? Something get in my mind the other time. Okay, sessions. Let's talk about trading sessions. We have different trading sessions. We have the what's it called? We have the London session, which is from 10 a.m. in the morning Nigerian time. We have New York session, which is 2 p.m. We have the Asian session, 2 p.m. Nigerian time. We have the Asian session, which is around midnight Nigerian time when it is active. Okay, then we have the which one again? London, New York, Asian. Which one again? I think we have one more. The most traded, I think, is in where people traded the most is where people wait for most is the New York session, but there's a lot of activities also on the London session because of GBP, PS. Okay, these are these sessions. Some peers are always very active, like they move very well. So these are things that you can just look up, look them up on your own, and get them done. Okay, Asian session. Thank you. London, New York, Asian session, and then there's one more. There's one more session. Yeah, I think there are four, and then we have the trading sessions overlaps. We have something that we call overlaps. Overlap is the time that there are the times where the London, New York, there should still be one. Okay, there should be one trading sections, Forex trading sessions. Let's check. Whereas there's a way you can show us. There's a way you can show us. So sorry guys. So these are the sessions. Let me check the images. There should be a way it's showing us something. Yeah, Tokyo, Sydney, Tokyo, London. Tokyo is also Asia, right? Should be. Tokyo is also Asian, right? So, where's my? I think my network is bad. My network is bad. So, we need to just. I don't know why. I don't know why. I don't know if it's my network that is not letting me click this. Not even opening. But you can just Google it and search it. So you can see them, the time, these are the time, they are overlapping time. That means the time that they are over, like this is an overlap, Tokyo and London overlap, then New York and London overlap. So people trade their overlaps. So, these are important things that you can get on yourself, by yourself, on your stuff, and then they are just, they're not that serious. You can trade from anywhere, but as you grow becoming a pro, you begin to get used to times when the market is more volatile, like there's more liquidity in the market. Okay, so you can trade from there. Okay, so you can trade from there. I think I've talked about I thought you guys liquidity last time, did I? No. So after this class is ended, I'm going to end the class now and take questions. Then go into talk about liquidity and other blocks, institutional reference point, your regular institutional concept. So we start that. So I'm going to stop that now and take our questions.